Today in crypto, Bitcoin is struggling to break key lines of resistance. News of big companies buying up Ethereum and actually some really huge Ethereum issuance news, and a giant Bitcoin halving hash rate spike has happened. What does it mean for Bitcoin? The Crypto Lark. This is where you subscribe for all of the hottest and all of the latest happening out there in the wild, wild land of crypto. And for those of you who are new to crypto and you still need help finding your feet, I have made a course to help you get started. It explains how to buy, how to sell, how to send, how to store, and how to mine Bitcoin, as well as a whole bunch of other top tips and resources for your investing success. There is a link down below in the description where you can learn more. So, let's start off today by diving straight into the charts. Turning first to the weekly, since we have just had our weekly close for Bitcoin. That bullish MACD crossover that we were talking about last week, it is forming up very nicely at the moment. This is a rare indicator that has signaled the start of the last two big runs for Bitcoin. But with the Bitcoin halving looming and a possible post-halving correction, this does run the risk of potentially being a false bullish signal in the short term. That being said, any correction after the halving is likely to be quite short-lived. That at least was what happened in the last Bitcoin halving, unless of course a wider economic downturn really just kicks off and drags Bitcoin under with it. And while the MACD crossover is definitely a good bullish sign, the real line that we need to break is that line of resistance on the weekly charts around $10,000. This line has been holding us down for more than 2 years. In fact, $10,000, it's not just a very important technical barrier for Bitcoin, it's also an incredibly powerful psychological barrier for Bitcoin. It is going to be a tough zone for us to achieve and to really hold above. And if we can crack $10,000 before the halving, then $10,500 has been a massive line of resistance from the two most previous big runs for Bitcoin. If we do get a break higher before the halving and seeing Bitcoin really test and reject around $10,500, that would not be surprising, so keep that in mind. However, if the price fails to hold, then we should definitely be watching for areas of support around $8,400, and if that should fail, the 200-day moving average around $8,000 is the line in the sand. And if that breaks, bad news for the Bitcoin bulls. Now, a retest and a bounce from either of these key zones of support, that would actually be pretty gosh darn bullish. So let's keep an eye for that to play out or not. Anyway, in spite of the bullish momentum we have been having recently, there is, of course, this big shadow over the market right now, which is the equity markets and the potential for a wider economic downturn. So stay frosty out there, everyone. Next up, I have some very fascinating insights for you from recent Bitcoin exchange balances. It appears that a significant portion of the retail investors who have been helping drive this rally, which, by the way, is a fact that has been supported by a lot of things we've covered here on the channel. Just as a quick summary, lots of new exchange signups have been happening over the last 6 weeks. New address metrics showing continual all-time highs for low account values, 0.1 or just even 0.01 Bitcoin. And of course, all the anecdotal stories shared from you about your mom, your dad, your work buddy, your Uncle Joe, all taking an interest in Bitcoin over the last week or two. Anyway, those buyers, those people have been buying Bitcoin and then wisely getting it off of exchanges, which is a good move. This chart here from Glassnode shows that on-exchange balances have gone down significantly during this rally, meaning that these investors are much more likely to be taking a longer-term view on their Bitcoin investment. These aren't short-term traders and speculators. They're buying, and they are getting it off of the exchange. These are likely people that are buying now with that expectation for that big run to start playing up in the next year to 18 months, or perhaps they're even thinking longer term. Also, if you are one of those people who are new to crypto, but you still have your Bitcoin sitting on an exchange, then you need to get yourself a hardware wallet and take control of your private keys and of your Bitcoin. My go-to is the Ledger Nano. They're currently running a 27% off special on family packs. There's a link down below if you do still need to get yours. In other exchange data news, so far in 2020, decentralized exchanges have done more than $2 billion in volume. Now we compare that to a total volume of around $2.4 billion from 2019, all of 2019 combined. And you realize then that we're still in the first half of 2020. Decentralized exchange volume, it is expanding big time. And I think this is a really, really good thing for crypto overall. Decentralized exchanges, they are the future. You stay in control of your keys, and they are way quicker to use than a centralized exchange. So great to see that this is expanding. Now, looking at returns of ERC20 tokens over the last year, it would seem that the market is also giving a lot of value to decentralized marketplaces. So only 30 ERC20 tokens actually outperformed Ethereum in the last year. On top of that list is Synthetics, which fuels the decentralized futures exchange. We have Kyber, which fuels decentralized exchanging across many different providers. ETHLend, which of course is working with DeFi loans, and Chainlink, which obviously is the blockchain's equivalent of a data pipeline. But picking the right crypto, it is a gosh darn tough task, because while these 30 cryptos outperformed Ethereum, 150 different ERC20 tokens saw either zero gains or up to 100%, basically completely failed. Now this just serves as a reminder that many tokens remain wildly speculative at this moment, and that you have a greater chance of losing everything than making those sweet, sweet, sick gains. But if you can find the right ones, then you will make some truly, truly epic, sick gains. But finding them is the hard part. Also, I found some really interesting data made by Adam Cochran that shows that big companies like JP Morgan Chase, Reddit, IBM, Microsoft, Amazon, and Walmart, they have all been buying up Ethereum over the recent weeks. It appears that at the same time that we have seen a number of addresses for the small holders, the retail investors, we're talking about people holding 0.1 or up to 100 Ethereum, or 0.01 Bitcoin or up to 1 Bitcoin. These addresses, usually we think of them as, okay, that's just the retail guys. We've seen that growing dramatically. But at the same time that's been happening, the big boys, they've also been accumulating Ethereum. Now, it's not just these big companies, of course. We've also seen Grayscale taking an active interest in buying up half of this year's supply of Ethereum. But these wallets in particular, they are known to belong to these big companies just mentioned. They have been buying Ethereum. Now, this story is not just different from the story about Grayscale and their huge Ethereum buys because, it's big companies buying stuff, but because these companies are directly buying and custodying the asset themselves. When you buy with Grayscale, Grayscale holds onto it for you. These guys are buying it directly, meaning that aside from just looking for the price to go up, they will likely be using the asset for deploying contracts on the Ethereum network, and of course, testing different features and different ways that they can use an open public network like Ethereum, as well as my speculation that we will see many major companies running nodes in ETH 2.0. I mean, hey, why not get it while it's cheap, right? And speaking of ETH 2.0, we have a new clue about ETH 2.0 issuance from the man Vitalik himself. The issuance of ETH 2.0 shall be reduced down to 2 million a year. Now that is less than half of the current annual issuance for Ethereum, which is around 4.7 million ETH a year. So let's recap real quickly on Ethereum economics moving forward. The issuance is being cut massively. Fees might be burned according to EIP 1559, and Staking is coming. Staking is coming. Do, 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 do. Remember, 80% of the Tezos supply is locked up for staking. What do you think is going to happen to the price of Ethereum, the second most popular, second most valued cryptocurrency, when there is a huge surge in demand for staking Ethereum? Imagine if 80% of the supply of Ethereum actually gets locked up for staking. That would be loco, man, loco. Another 10% maybe locked up for DeFi, and newly created Ethereum being dropped by more than half. Ethereum, or Ether particularly, is going to become really rare, really, really quick. This could be the economic event that is actually way more important than the Bitcoin halving when we talk about the impact of the wider crypto economy. So definitely something to keep in mind as we do move forward towards ETH 2.0 and the impact that staking is actually going to have on the second biggest cryptocurrency. Now, over in Bitcoin land, so the Bitcoin halving, it's only 8 days away. You probably are aware by now. Everyone's talking about it. But the Bitcoin hash rate, it has seen a massive spike in anticipation of this event. And it will probably see a massive decline just afterwards. Let me explain. You see, just 6 weeks ago, Bitcoin miners, they were in big trouble. There was a miner capitulation event happening with mass amounts of machines being turned off, thanks, of course, to that great little 50% drop in the price of Bitcoin that we saw. However, this temporary surge that we are seeing now in the price of Bitcoin, it's actually giving these small miners just one last little chance to get a little bit of Bitcoin before the machines become worthless. You see, the older mining rigs like Bitmain's Antminer S9, it can actually generate a profit again at these prices. Not a lot of profit, but enough profit to make it worth turning it on. But the harsh reality is that these miners who are turning their S9s back on, they're only going to be profitable for 8 more days. Then when the halving hits, boom, all these machines get turned off again. There'll be a massive drop in hash rate. Unless, of course, the price of Bitcoin doubles between now and then, which is very unlikely to happen in the next week. Now, how quickly new machines actually get shipped out to miners, that's going to depend on what's happening with the supply chains, what's happening with the current crisis, and of course that will then dictate how quickly the hash rate actually recovers and hits new all-time highs. However, a hash rate drop of 50% or more, it doesn't really matter. Bitcoin is still the most powerful computer network on Earth by miles. Mining investment's still going through the roof, so we're all good there. The Bitcoin halving, it's going to happen next week. You're probably not even going to notice, except for all of us YouTubers talking about it. The blocks will continue to be mined. The transactions will continue to be processed. But miners will just start receiving 50% less Bitcoin for their work. The effect of this rather bit of mundane code executing, it's not going to be felt immediately. It's going to kind of be like a snowball rolling down a hill. At first, it's just going to be tiny, barely noticeable. But slowly and steadily, the impact of this event, it is going to grow until it becomes really just a full-on avalanche, just taking out everything in its path. And of course, that will result in new, insane high prices coming to the markets as the effects of 27,000 less Bitcoin being dumped by miners every single week at the same time that we see retail demand rising. We've seen so much retail demand in the last few weeks really coming into effect. Here's what you do. You buy and you hold. You stack and you chill. It's just simple. Remember, we are still crazy early in the Bitcoin game. Take a look at this chart here. It shows the market cap of Bitcoin versus the market cap of gold versus the Fed's current balance sheet and versus the current currency supply. Bitcoin, still just a little baby. Bitcoin, my Bitcoin baby. Anyway, those are my 2 Satoshis, guys. Your question for today: which event do you think is going to have a bigger impact on the wider crypto economy? Is it going to be the Bitcoin halving, or is it going to be Ethereum staking? Very curious to know your opinion on the difference between those 2 events and how you think it's all going to play out. Thank you so much for watching today's video. Hope you're having an awesome day out there, wherever you are, whatever you're doing. Keep it classy, guys. Long live the blockchain, and peace out till next time.